Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. I'm going to do this whole one with my glasses on. My sight is getting worse, so eventually I'm going to have to get the contacts. I just can't take nothing coming close to my eyes, good people. Hey, if you're new to the page, hit that like, subscribe, and notification bell, and come join us here at Stock Up View, okay? Let's get right into it on this Thursday. We got a lot of data. Remember, Monday is a holiday, so the market will be closed. So make sure your positions are locked. Any options that you're in, I would be careful holding them over the weekend. That's all I'm going to say. Let's get right into it. We got the markets going good today. We will take that as we have a few minutes for close here. Look at that. S&P, Dow, and NASDAQ all up. 23 on the S&P, up in the NASDAQ 136, right? So let's keep it going. I want you to know about these data points, okay? I'm going to continue to stress these data points, right? Tomorrow, we will have a PCE, personal consumption expenditures. That will be released on mañana, tomorrow. See there, August 29th, 2020, at an hour before the market opens. All right? An hour before the market opens. Do yourself a favor and make sure you are watching that. Okay? So we're going to count them down. Tomorrow is PCE. We're going to keep our eye on PCE. Okay? And then the next thing we have is jobs. Jobs will be released September 5th. Okay? So the jobs will be Friday, September 5th. What's that, in about a week? So we got PCE and jobs, the Fed's preferred inflation gauge, and now the Fed most preferred inflation gauge, as he spoke at Jackson Hole and said, my focus is now going to jobs in the weakening job market. If these job numbers come in strong, meaning there is no loss in jobs, then he's less likely to lower interest rates. Just keep that in mind. And then we have PPI, okay? PPI will be September 10th, right? So we got the jobs on the 5th, PPI on the 10th, and then CPI on the 11th. Okay, so we have PCE, jobs. So, well, tomorrow we have jobs, right? Then we have PPI and then CPI. I'm sorry, let me back up. PCE, jobs, PPI, and CPI. Okay, what is that all leading to, Larry? That's all leading to the next FOMC meeting, where the dog and pony show of the Fed telling you whether he's going to stay or reduce interest rates. I doubt if he increases. That would really spook the market, and let's just say it won't be good. But remember, the 16th is when the meetings start. The 17th is when he releases his decision, and then he talks. And as you know, the longer he talks, the more the market tanks. It's like a song and dance. What else is going on? We got the S&P rising to 6,500 for the first time as Nvidia results validate an AI boom, right? So everybody, all eyes was on Nvidia. And the truth be told, Nvidia's numbers were good. A lot of people are just, well, they were weak in this and strong in this, and they couldn't give the China numbers, and they were weak in this. They killed it. I mean, for a company that big to do that good consistently, I'm not going to say they killed it, but I'm going to say it was good, right? But Nvidia reacts like it is. Yesterday it was up 3 points, and then in the aftermarket it was down 3 points. So I'm just going to call it flat. I haven't looked at it in the last few minutes. Now, I want you to listen to this back and forth on CNBC on what these people whose pay grade, I'm not going to say pay grade is higher than your boy anymore, but they probably went to school a little longer than I did. Let's listen.
So far, so good. I think the market is discounting a technology-led productivity boom, and with better growth, inflation staying down, better profitability, and real wages going up.
And rate cuts.
And possibly rate cuts. I don't know. I mean, it's not a done deal yet, right? I mean, it seems like everybody's anticipating it'll happen.
Well,
but I think
the market just don't break the market's heart, Ed. I mean, because the market has moved on, thinking that this is a given.
The market loves Fed puts. So if we can get a Fed put, and maybe the economy really doesn't need it, I guess we'll get a further melt up. Look, I think that the outlook is that we're in a bull market, tremendous amount of buying power, lots of buying on the dips. And so I think it continues. I'm using 6,600 now by year end, and 7,700 by the end of next year, and 10,000 by 2029, not 19. Not
yeah, 19, don't start talking about that.
No, we don't want to go there.
Yeah.
Talk about bullish. He's bullish beyond, he's not seeing any slowdown in this market, no recession. No, he didn't say there was no correction, but he is so bullish and just forward looking, just green skies. Okay. Let's see what Tom Lee says.
What are you seeing maybe that some others are missing? I don't know.
Well, I think too many people are tied to their own biases. So like when markets were falling in February to April, then in their own portfolios, they were suffering damage. And as you know, that gets into people's sort of psychology because no one likes to lose money. It's more painful to lose a dollar than to gain, than the joy of gaining a dollar. But what we did was we took a step back and said, with all the forces at work, are we really going to drive the economy off a cliff? And if the answer was no, then we know that at those points of fear, that's when, as hard as it is to do, is you either have to hold on or buy. And that was our advice to clients.
Yeah, and is there anything that you see in your research, Tom, that would imply that this momentum trade, if it is indeed a momentum trade, is going to end anytime soon?
We don't. We for instance, if we take AI as a thought, and we, let's say, overlay something like the exponential growth of the wireless industry, that was a 20-year period when the number of users went from 37 million subscribers to 7 billion. We don't have 7 billion ChatGPT users, and we don't have 7 billion robots. So I think if not yet, that's right. And so if someone's trying to ring the bell at the top for AI, they're underestimating how quickly penetration grows. We're probably in the first quarter or first third of that cycle.
So you heard there from Mr. Tom Lee. Of course, you say he's a permabull, but he's been right. So we have to look at what happens historically in the market, do our data, and play this day by day. But so far, if you've been a bear, you've lost money. You've lost a ton of money, left a ton of money on the table. Here, I just keep it real. We continue to make money. Crypto is kind of cooling off right now. We'll discuss that a little maybe tomorrow. But we got to keep our eyes on the prize, not just in crypto, not just in options, but more importantly than that, we need to build strong foundation. And when the market went down the other day, I snapshot my crypto portfolio and my stocks portfolio, and in Money Moves, I shared this, okay? I posted this in Money Moves. You can see that August 19th at the bottom. You can see my balance was down 24K in one day at the bottom there. One day I was down 24K. Look at that. And I posted that in the Money Moves. And I posted that so everyone could see it. Like I wanted them to know you're not the only ones that are going down, right? And I posted that. But today, without adding another penny, I'm up 11,000, right? And so, and I have a lot in cash, so I'm up 11,000. And so what I do is I share my portfolios and what and why in Money Moves, okay? And then my overall portfolio, I'll just share with you guys 36%. That's pretty good. Anybody tells you you can't beat the S&P, that's not true. You just have to be actively managed and know what you're doing, right? So come along and make some of this money with us in Money Moves. Right now, I'm just telling you guys, I got something exciting coming that I'm working on that I shared with my Patreon. I'm calling it a Patreon, but it's all on WAP. It's easy. But come join us in Money Moves, and we do have a clash there for options, but we are focused right now on building strong foundations. And then when we really start to killing it with options, I'm not going to say killing it with options. When we start to make money with options, we're going to take our winnings and then we're going to go and we're going to fund our long-term portfolios. Okay, good people? Even ETFs, okay? Even ETFs. I'm up about 13% on the ETFs. And all of this, mostly all of this, was since Liberation Day. So I want you guys to pay attention to the percentages and not the amount. I get it. To some of you guys, it's nothing. To some of you guys, it's a lot, okay? But I want you to come on this journey with us and remember, just because you're not actively putting your money at risk every single day does not mean you're missing out, right? As a matter of fact, it's an emotional thing that people that feel like they have to be actively trading every day are losing money. Sometimes we pull back in Money Moves and we just wait, protecting our gains. We just waiting on the next dip, and then we go in and we pounce and we sit back, rinse and repeat. Okay, so come join a gang of us followers, just a gang of our followers, should I say? We call them family of people, and let's have a strong foundation with long-term portfolios, and then we build them. We're killing it with crypto. Every crypto play is very strategic, and then we are going to get into options, okay? We already have a full options class there where people are learning and earning, okay? And then we're going to get to some live options training, okay? We're going to get there, and then I have some exciting news that I shared in Money Moves, all right? All right, good people, you have a blessed weekend. Remember, tomorrow we got PCE, and then Monday is a holiday. Live, love, laugh, and learn. We'll see you in the link below.